I'd like to go over self-serving bias, especially that we are approaching FOMC decision and potential decision on China-US tariff negotiations. So it's very important to talk about trading psychology and also different biases that drive our decisions. For those of you who are new, this is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. Since I left Options Express, I work as a consultant investor in several financial technology firms. Started Tradespoon 2012, started Yellow Tunnel this year. So I'm very excited about that. My experience is I've been trading for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stocks. And finally, I have a master's degree in computer science, specialized technology and science. Please take a look at the disclosures, since I'm going to go over the current market condition, potential trade setups. So very important to read the disclosures. I'll let you guys do that for a second. So what is the self-serving bias? And according to Psychology Today, I like this definition. The self-serving bias is people's tendency to attribute positive events, such as outcome of the trade. One example I put down is buying TLT before FOMC. So TLT is right at the 50-day moving average as we speak. It has a support if you anticipate that the interest rates will be lower, then the treasury prices will go up, right? Inverse correlation. So you structure your trade and you buy in TLT. And if the trade goes in your favor, then you basically attributing this to your skill. And if the trade goes against you, you would attribute this to being unlucky. So attributing positive events to your own character or skills, but attributing negative effects to external factors such as unluck or stock tweets and stuff like that. It is a common type of cognitive bias that has been extensively studied in social psychology. So again, this is another picture that I like. So if the trade went against you, if you bought, let's say, FXI, and Chinese market actually sold off because we are not going to reach an agreement, let's say by October 15th, and you bought an FXI and FXI sold off, you basically, even though it's the similar setup, you would attribute this to being unlucky. So the first step is to make sure you're self-aware and recognizing that you are trading on a bias and seeing that you have certain patterns of thinking where the success, you look for gratification, right? Our brain is wired to look for gratification and good feelings, so we attribute to our skills. But if trade goes against us, we would attribute this to just being unlucky or blame it on the news in the market. Another strategy that works for me is concentrating on what and how, and as opposed to why. Again, research shows that why could be a very dangerous thought process. If your thought process starts, why did it happen to me? Or why am I so unlucky every time I buy during FOMC meeting, the trade goes against me, or during an event? If you're spending too much mental energy thinking about why, then that could be negatively reflected on your overall well-being and your trading performance. Instead, try to concentrate on what can I do next time there is an FOMC meeting or tariff negotiations to avoid the mistakes. So recognizing mistakes and concentrating what can I learn from the previous experience, how can I modify my trading plan so I avoid unnecessary losses. Controlling the position size, controlling the trade size, controlling your portfolio drawdown, how many positions you have. Those are important information to learn from the FOMC meeting and from the China and US negotiations that will happen in the next week. Always, empathy is a very important feeling. Research shows when you experience empathy for yourself, if the trade went against you, instead of blaming the news or yourself that not predicting the outcome correctly, exercise empathy. Realize that these feelings, you're not the only one. Every trader experience, every time the trade goes against it, they're experiencing these emotions, and feeling empathy for yourself and concentrating on what you can learn, not to be overly exposed to the uncertainty in the market. That is something that worked for me. Controlling the trade size and controlling the process. Very hard to predict what the outcome of FOMC meeting will be, which takes place actually in the next 3 hours, or what will be the outcome of the meeting between US and China delegation this week. But you can control the process, your portfolio size, your position size, how much do you hedge your portfolio when the market is at all-time high. So you can concentrate on process and not concentrate on the outcomes. If you're on the wrong side of the trade as a result of the FOMC meeting, which will take place in 3 hours, blaming yourself, asking yourself this dangerous question of why, that usually will adversely affect your performance. So don't concentrate on the outcome, concentrate on the process, and concentrate on what can you learn, how can you modify your trading plan to avoid these mistakes, and recognizing and changing your habits, right? That takes time. Just because you watch this video for the next 5 to 10 minutes doesn't mean all of a sudden you will change your behavior. It takes time, it takes practice. Discipline does take time. So first step is recognizing, second step, realizing that it takes time, and then changing behavior and habits is extremely important. My strategy, I like to be long and short, especially if I feel that the market, as of right now, will trade in a sideways range. I outline these lines on your screen. We're trading between all-time high 50-day moving average on SPY and the 200-day moving average. I personally think that in the next week, or I would say next 7 to 28 days, market will retest 200-day moving average. This is how I'm positioning my trade. But at the same time, I do recognize that if there is an agreement between US and China, then the market will, I will be wrong, and the market will break out of this range. So being long and short, you can express your bearish bias using debit put spreads or credit call spreads, bearish call spreads, but you can be the long and short market at the same time. And that usually helps you control your risk. Trading journal is important, and again, learning from your mistakes. These are some of the key support and resistance levels. I always show them just as a reminder in terms of hedge, cash, cover calls, and looking at the key support and resistance levels. Some of the other things that we covered, have well-defined stop losses, target gain stop losses. Those are the two levers you can control: return on capital and probability of success. And participate in live trading room, share ideas, share with your strategies with like-minded trade individuals. All right, so spiders again. We're currently at 300, couple hours before the FOMC meeting. Research based on the Tradespoon technology. This is a seasonal chart. Our flagship product makes long-term prediction. Long-term market shows that 3 out of 4 higher, so we have 81%. Trading and probability of success going into November, December, model does see upward bias and does see potentially breaking the overhead resistance at 302. So from statistical point of view, in the next 50 days, market does anticipate end of the year rally. I think that's what will happen in the current market conditions. Short term, September, October, potentially retracing back to August lows, maybe not as low, maybe not reaching that level, but getting close to October, August low, sometime between middle of September and second week of October. So I think this price patterns will repeat, this history will repeat itself. And I encourage you to keep an eye on the market updates. I try to post them when I see critical levels in the market reached. I do update market, and then we have webinar next Wednesday. If you can participate in the next webinar, if you register and participate or get a recording, I think would be important. And we are posting. You will be able to register for this webinar. Let's see. All right, that's all I have for today. Thank you very much, and we'll talk shortly. Thank you.